Let's go. What's going on, Michael, Tama, Jay, Flavius, Eagle Eye? Ladies and gentlemen, it's good to see you. Here's what's going on. You guys may or may not have heard about this, but long story short, Citadel was fined a paltry $1 million for tens of billions of errors. Yeah, another slap on the wrist. And at the same time here, Virtu Financial investors are calling for the company to be sold off. That's right. And this is probably somebody you've heard of, this investor here. So let's start talking about the reported Citadel violations. Here's what went down. The reported violations that are over 42 billion errors by Citadel Securities, in which they failed to accurately and timely report tens of billions of equity and options order events, raises huge implications for market integrity. There is a serious problem with regulatory oversight and incredible risk for market manipulation with these. And let's break this down and discuss it. The nature and scale of these reporting failures is beyond massive. We are looking at over 42 billion with a B of misreported and late reported data from, get this, 2020 through 2024. As recently as August of 2024, for Citadel Securities suggests that some serious systemic issues are happening right now. Let me go ahead and reset this webcam for you because that is hilarious. Just got stuck. Yeah, it is an astronomically large number that we're dealing with here, Fisher. You're absolutely right. So they misreported cancellation events and immediate or cancel orders and order indicators. There has been a huge delay of up to 17 months, basically a year and a half, in correcting these errors. So this vast misreporting compromises the accuracy and the completeness of the consolidated audit trail, because this is directly related to the CAT system, which regulators here, the Securities Exchange Commission and the Department of Justice, rely on to monitor market activity, detect market manipulation, and ensure fairness, which, as you guys know, is kind of a joke here in these financial markets. Andres says these criminals need to go to jail for life. Stop the corruption. My guy. So the missing or inaccurate data disrupts the Securities Exchange Commission and the Department of Justice ability to use the consolidated audit trail to track orders from start to finish, which obviously undermines transparency in the order flow process and opens things up for an incredible potential for market manipulation. The CAD data is critical for detecting these manipulating trading practices, such as spoofing, which is placing fake orders to manipulate prices, layering, which is creating false market signals by placing and canceling multiple orders, and front running, using order flow information to trade ahead of these large orders. So the following reporting failures could easily enable market manipulation. There was 31.2 billion events of unreported or misclassified cancellations. And by misreporting the leaves quantity fields for canceled orders, Citadel systems here created an incomplete picture of order activity. This makes it harder for regulators to detect when spoofing or deceptive cancellations meant to influence prices is occurring. Then on top of the unreported or misclassified cancellations, that was 31 plus billion events, there was also 4.3 billion events of inaccurate IOC orders. So the IOC orders are critical for understanding high frequency trading and its activity, where speed and cancellations play a massive role. Errors in reporting these orders could observe high frequency trading driven manipulative behavior. And then you've got the indicator misreporting of over 6.3 billion events more. This affects how orders are categorized, which creates a false order flow signal. makes it really impossible for retail investors to properly trade when these three things are happening, because they're spoofing the market. Allegedly, they're spoofing the market, layering the trades, front-running the trades, and misreporting these indicators. Of course, by concealing and distorting the order activity, even if it's unintentional, they have the ability to allow manipulative trades to go undetected and skew market analytics and investor perception of liquidity or demand. This creates systemic weakness and industry implications. And the fact that Citadel Securities, a major market maker, has experienced such prolonged and large-scale issues highlights broader concerns here. The reliability of the market data, with a key player like Citadel failing to comply with CAT reporting, how accurate is the entire CAT system data set for regulators to work with? We have a huge risk of systemic abuse. Manipulators could easily exploit gaps caused by the poor reporting, as regulatory oversight relies on the complete and accurate CAT data. And the over-reliance on automation, Citadel's coding and systems issues, reveals the vulnerabilities that are relying solely on these proprietary reporting systems without rigorous oversight. Everlong Gaming asks, are we really surprised by any of this? No, we are not. And Black Widow says, stop loss hunting too. Absolutely right. This is creating serious issues here, and it gives them incredible amounts of leeway in manipulating markets. So we're looking at a player like Citadel, with its significant market presence as the world's largest market maker and one of the largest hedge funds in the world, processing a massive portion of retail trades. And the poor reporting here could obscure patterns of systemic market abuse affecting price discovery and market efficiency, especially in a time where certain stocks and exchange-traded funds are incredibly highly manipulated. For example, from 2020 through 2024, June 22nd, 2020 through August 28th of 2024, in which Citadel did these things, you guys saw massive issues and price changes in stocks like GameStop, AMC, the SLV ETF, and many, many others. So yeah, they made potentially here hundreds of millions of dollars, if not more, and were fined a $1 million. This is a negligible slap on the wrist, cost of doing business, $1 million fine compared to the scale of errors and Citadel's financial size. This raises huge questions about the enforcement and if it actually has the teeth to deter future violations. Obviously not. The prolonged period over which these errors occurred, which is over 4 years, suggests that the Securities Exchange Commission oversight during the time frame has been more than lacking, to say the least. And thankfully now, under the new Trump administration, we have Paul Atkins coming into the fray as the new head of the Securities Exchange Commission beginning January 20th, 2025. And he has in the past stated multiple times that naked shorting and illegal market manipulation needs to be culled. And the manipulation that's occurring and the fines that are being doled out in exchange for this manipulation are insufficient in stopping the issues. So, hey, Typo Negative, great to see you, my friend. Welcome back to the channel. We are very bullish on the Trump administration, Paul Atkins coming in as the lead Securities Exchange Commission chair, as well as J.D. Vance, the vice president, whom has in the past sent multiple letters to Congress and the House of Representatives on behalf of MMTLP investors. Over 65,000 people were screwed over by the unauthorized and, in my opinion, illegal FINRA early halting of trading of MMTLP. In addition, you've also got Robert F. Kennedy Jr., who has come out and publicly stated multiple times and even worked with people such as myself with his administration in coming up with good ways to actually stop the market manipulation and reform and figuring out how to reform financial markets, stocks, etc. So all of this is really bullish for the retail investor, especially compared to what we're currently seeing with Gary Gensler and the existing Securities Exchange Commission going after small companies and small businesses, some of which who deserve to be stopped in the criminalities that they're doing, but at the same time, they are avoiding going after the big fish. And that indicates a huge lack of regulation there for the biggest companies in the world, the ones that are committing the most errors. So this really, for retail investors, erodes confidence in the fairness and transparency of the stock market, equities markets, options markets, and even cryptocurrencies, because it's all handled by the same people. And Citadel's role as a market maker means that millions of trades flows through their system every single day. And any reporting inaccuracies distort trade execution data and affect investors' trust. Ladies and gentlemen, the conclusions here are that the implications and manipulation potential are through the roof. So Citadel Securities' CAT reporting violations undermine the very integrity of the infrastructure and regulation that has been designed to detect and prevent market manipulation against everyday retail investors like you and you and you and me. So while there's been no direct evidence of intentional manipulation stated in this censure and letter of acceptance, waiver, and consent, the errors create opportunities for bad actors to exploit these gaps and complicate regulators' ability to identify the deceptive trading patterns and highlight systemic vulnerabilities in automated reporting systems used by these key market players. So this measly $1 million slap on the wrist of a fine and the over 4 years duration of these tens of billions of errors further suggests that the Securities Exchange Commission needs to increase their scrutiny and actually do their fucking job and enforce to safeguard market integrity for retail investors. And so these emphasize the need for actual robust oversight to prevent market manipulation and failures. And at the same time, this is something that is being seen by many people all around the world. And even, like him or hate him, this guy by the name of Bill Pulte of the Pulte family is now calling for Virtu Financial, the world's second largest market maker, to be sold. The Pulte family office today, a current activist shareholder in Virtu Financial, and the founding family of one of the largest home builders, Pulte Group, is calling upon Virtu Financial to sell itself to either a third-party private equity firm or to another public company. So Bill Pulte, the chairman of the Pulte family office, stated, after significant review and attempts to work with management constructively, it appears to us that current CEO Doug Sifu is not focused on building a materially bigger business and spend precious time tweeting on items not related to the core operations of the company. As such, it now makes sense to put the company in the hands of professional owners. We strongly encourage the board of directors of Virtu Financial to pursue strategic alternatives, including but not limited to selling themselves to an owner who can unlock the true potential of Virtu. Pulte stated, we predict that if change is not made soon, Virtu Financial will and should be sold. We stand ready to help usher in the change for a new generation of Virtu Financial. If the company does not elect to explore a sale, we may be forced to bring forth a proxy contest or other actions as appropriate, legal, and necessary. Signed, the Pulte family. So there you go, ladies and gentlemen. More serious issues occurring with both largest market-making firms in the country and in the world, and the largest hedge funds in the world as well, with Virtu's hedge fund and Citadel's hedge fund, both of which are a massive conflict of interest. The fact that regulators allow Citadel and Virtu to both be a market maker and then have a hedge fund firm is the biggest conflict of interest that could possibly exist in the history of financial markets. This is an absolute kangaroo court, if you will, of the Securities Exchange Commission doling out these minuscule fines to these companies with massive conflict of interest. And it needs to stop. But guess what? It's not going away. Hey, you know what? Huge shout out to Meatwad. Thanks for that, your support there on the channel, my friend. As well as Kosis. Welcome to the channel as well. The fact that this is not stopped or been stopped by regulators shows you just how little they care to actually make these changes. These things are not going to be changed. Payment for order flow, dark pools, market manipulation, spoofing, naked shorting. Some of them are legal and some of them are illegal. But the fact remains that they continue to happen. And they're going to continue to happen until your orders stop getting sent to these dark pools in which prices are distorted and suppressed by the very same market makers who have hedge funds that benefit from suppressing your orders and suppressing your favorite stocks and controlling the prices of equities around the world. The only way this is going to change is if you actually make it a change for yourself. Go to LITXCHANGE.com. Join the waitlist with your email address. Do your due diligence on the company and consider investing in the company. Because for the first time ever in the history of the world, you have the opportunity to own equity shares in the company before launch and IPO. Then when we IPO in the near future, you will have the opportunity to sell your shares for a significant profit. Now, it is not cheap. The minimum investment in LITXCHANGE is $500, but that also gives you a potential to receive an ownership and a valuation at the current private equity valuation, opposed to what it will be valued upon IPO, which will be significantly more. Now, of course, there's always risk involved with private equity or any investment whatsoever, whether you're investing in a publicly traded stock on the New York Stock Exchange or the NASDAQ or private equity. The difference here is we are the first and only upcoming stock and crypto brokerage to ever give retail investors the opportunity to own the company prior to launch and IPO. No other firm has done this, and Robinhood raised over $3 million from Sequoia Capital. But unlike Robinhood, we are giving this opportunity to retail investors because we believe that you deserve the chance to make some potentially serious cash. Not to mention receive a plethora of benefits and perks that has never been seen before. There are already thousands of people that are signed up on our wait list to participate in LITXCHANGE and to bring their assets under our management so they can begin trading on our platform upon launch. Currently, we are accepting new user signups, but once we launch, that will be limited and become by invitation only. So your best bet is to sign up now with your email address. And of course, we'll never sell, give away, or share your email or personal information. Black Widow says, too bad LITXCHANGE wasn't launched 2 years ago. We could buy Virtu. Correct, my friend. The difference here is that we are actually taking our time in launching this company correctly. This isn't some software company. This isn't some application this isn't some simple application here. This is a highly regulated space in which we are launching a completely brand new and bleeding edge technology as a fintech firm, as an upcoming stock and crypto brokerage. So this is something that's never been done. This is something that will probably never be done again in the future, and we are using a business model that is tried and true, but the current existing companies would not use this business model because they make more money by selling your orders using payment for order flow to companies like Citadel, to companies like Virtu. So I'll leave you guys with that. I think I've said more than enough here. I wish you peace and wealth. Have a wonderful day. I'll see you guys tomorrow. Cheers.